As I've heard people ask me how you should invest based on what the market is doing, I used to be a person, actually years ago, and I had a PhD when I used to say this. I've actually gotten smarter since I got my PhD because I think I've had my doctorate for 15 years. And I was pretty smart when I got my PhD, but I'm smarter now. So back then, I would say, well, it's usually best to buy when the market dips and to sell. If you're going to sell when the market's going up. And I'm not saying that that's bad overall because that strategy does work. But think about it like this. I started thinking, I said, what if you went back to 2013 and let's say that somebody's applying that same philosophy and they say, oh, well, we should sell when the market's up and buy when the market's down and all that stuff. Okay, that's fine. But if you went back to 2013, most stocks that were trading in 2013 that are trading now were cheaper then than they are now. And it didn't matter if the market had gone up the previous week. The Dow is at 26,000 now. If you went back to 2013, it was maybe, 18,000, 19,000, right? So everything was a bargain in 2013 if you compare it to 2019. Does that make sense? Literally, it would be hard to buy a diversified portfolio in 2013 and have anything that you bought be a bad buy at any time. You could buy when the market was at its absolute peak and still be getting a great deal because everything's, increased substantially in price since that time, right? So if you were to make the assumption that the next, 6 years are going to be like the last 6 years, then the optimal approach is to buy whatever you can when you can, right? Like now, as quick as you can. Right? Or be consistently buy, right? So there really is no good time or bad time to buy in, honestly. You just want to get in. Don't sit on the sidelines. The worst thing to do is sit on the sidelines, at least based on history, at least based on the way the market has performed for the last 100 and some odd years. That sitting on the sidelines is always the worst strategy you could take. And so if you want to know why black wealth has not grown, it's because black people have been sitting on the sidelines, either out of fear or maybe lack of knowledge, lack of understanding, which is understandable to a point. But the information's out there, the knowledge is out there, or just lack of action. Sometimes what we do, financial habits are hard to break. And so a lot of times our habits are just these things we do on autopilot. And so it becomes very dangerous when you have a culture where the financial habits are so destructive that when you do things on autopilot, you're ultimately killing your economic situation.